Hello and welcome back to Digital Asset Daily. Good morning, good afternoon, or good evening, wherever you are in your corner of the world. Right into JPMorgan Chase is set to launch UK Digital Consumer Bank this year. So it seems 2020 is going to continue getting exciting. Right into JPMorgan Chase is close to launching a range of personal banking products in the UK. The world's biggest lender by market capitalization is set to introduce savings and loan products using the Chase brand in the next few months, according to Sky News. The New York listed bank is due to hold an investor day next week and will set out growth strategy details. It is not clear whether the UK consumer banking venture will be on the agenda, but JPMorgan has held talks with Citi and banking regulators to ensure it has required approvals ahead of the launch, sources told Sky. The report claims the new service is likely to launch later this year, and an insider said Chase is likely to offer savings and current accounts along with a range of open banking services and loan products. The U.S. based bank may also consider entering the mortgage market, although it is not yet clear. Further details of JPMorgan's plans are unknown at this stage. However, it is understood that the project will be led by an existing executive. And the bank has more than 50 million digital banking customers in the U.S. and claims customers can open an account online within 5 minutes. JPMorgan has a market value of $431 billion USD, or 329 billion pounds. It means that the bank follows in the footsteps of fellow Wall Street behemoth Goldman Sachs, which opened its consumer bank named Marcus in 2018. But JPMorgan has declined to comment. But I think it's getting more exciting. The digital world for a lot of us and the new people, basically, let's not blend them, but a lot of us people have been around a while, where when we first started, we weren't sure how long this was going to last, if it was going to stick around or even be legal. Now it's very exciting to have been here for so many years and to be able to share this with those of you who are new to the space and new investors. As you can see, you may come in with a little bit of insecurity, but now everything is set. I mean, we have banks who are focused on digital. We have all of the governments globally making digital currencies for their central banks and for their nation. I mean, it's come so far in the past, basically like 11 years or so, that it's mind-blowing to have come in back then and followed it since day one to where we are today. The point is, if you're a new person coming in now, again, we don't give financial advice. It's for entertainment purposes only. But we can share what we've done. And for those of you who are coming in now, it's so much more stable. There's zero question of, is it going to remain? Is this temporary? Is it a scam? Is it, a pyramid scheme? What's going on? What is it? And to know now it is a global affair, that it's basically not going anywhere, and it will be here as a new asset class, is very exciting. Next article, Visa grants Coinbase the power to issue Bitcoin debit cards, adding to the conversation that we were just having about it's going to be here forever and here to stay. Credit card giant Visa has granted its principal membership to a cryptocurrency company for the first time, officially awarded to cryptocurrency exchange Coinbase in December, but not revealed to the public until today. The membership cuts out a crucial and expensive middleman from the process of issuing a debit card that lets users spend their own Bitcoin, Ether, and XRP anywhere Visa is accepted. And as you know, as you're probably here for the same reason, XRP is our focus and favorite. It is exciting to see that we now have a Visa card that will allow us to use those digital assets. Although personally, I won't be using any Visa card with my XRP today, as I am here for the long haul and I know how high it's going to go. Today's price is just not enough for me to be even tempted to spend my XRP. Perhaps even more importantly, though, the principal membership makes Coinbase the first cryptocurrency company with the power to issue debit cards for others, including other cryptocurrency companies and more traditional firms alike. Visa confirmed it granted Coinbase the principal membership, clarifying that the company itself won't actually accept cryptocurrency when the project goes live later this year. While Coinbase says it's not planning on issuing cards to others anytime soon, the principal membership status marks a potentially important new revenue stream for the company, which Forbes estimates it saw a 40% decline in earnings last year. By simplifying the process of spending cryptocurrency anywhere Visa is accepted, the membership also lays the foundation for a potential explosion of cryptocurrency being used to buy everyday items, regardless of whether the merchant itself accepts cryptocurrency. This also puts an end to the confusion, if it wasn't enough before, even directly coming from Brad Garlinghouse and the common knowledge of XRP being a cryptocurrency, even stated by the U.S. government back in the 2015 FinCEN settlement, stated directly from the government that it was a currency. This definitely solidifies it that now Visa will allow you to use your Bitcoin, your Ethereum, and your XRP as a debit card currency. That should itself put an end to the final lawsuit that Ripple is going through, with XRP possibly being the security. Next piece of the article, it says, your Bitcoin holdings have never been liquid because you have to sell them. You have to go through a process, withdraw the money, and then spend it. It's never been an instant, oh, I'll buy this cup of coffee with Bitcoin, says Zishan Faraz, the CEO of Coinbase UK, which received the membership. What the card is trying to change is the mindset that crypto is tucked away, takes 2 days to access, and can actually now be spent in real time. Managed by Coinbase fully owned UK subsidiary, based in London with offices in Dublin, the card that automates the conversion of cryptocurrency into whatever currency the merchant accepts will be available in 29 countries when it is first issued later this year, including Denmark, Estonia, France, Germany, Ireland, Italy, the Netherlands, Norway, Portugal, Spain, Sweden, and the UK. The Coinbase Visa debit card will not be available to U.S. residents, further simplifying the process of actually spending cryptocurrency. The 9 assets available on the card also including Litecoin, Bitcoin Cash, Brave's BAT, Augur's REP, Oxa's 0x, and Stellar's Lumen won't likely be subject to unwildly capital gains taxes at the point of sale. And again, here we have XRP and Stellar being back connected through Visa. And as you know, if you follow this channel, we've already connected Visa to being connected directly to XRP and XLM. So it's great to find articles that again solidify our what's the word I'm looking for, like our confidence and our research and our credibility, as again, the more we research, we have not found anything to prove us wrong, but further right. We're very excited about that, as we do a lot of deep research and deep dives for many of our articles and many of our videos. We just don't always label them as such, because for us, research is what it is, research. Faraz says direct access to the Visa network gives the cryptocurrency exchange more flexibility in the business models it pursues. A previous Coinbase Visa card was issued in April of 2019 by financial services firm PaySafe Group Holdings Limited, which vets its customers, including corporate spending from Soldo and mobile banking app Lunar, and charges a fee for the service. You have a dependency on their risk appetite and the models they'd like to work with, says Faraz. Direct membership allows us to take control of our issuing program, while fees merchants traditionally pay to their banks to accept credit card and debit cards will remain the same as any other cards. Coinbase's own fees could eventually be reduced as a result of the membership, though Faraz declined to share the exact amount Coinbase paid to PaySafe to issue its cards, citing a non-disclosure agreement, and we're very familiar through Ripple and XRP of the NDAs. The removal of that cost is expected to eventually result in reduced fees for the end user. Currently, Coinbase charges 2.49% fee on the domestic transactions, and that's regardless of the value, in addition to other potential charges. If those fees are reduced as a result of the membership, existing card owners would need to reapply for a new card issued directly by Coinbase in order to benefit. A direct membership gives us more cost efficiency, says Faraz, and ultimately as we scale the program, the goal is to pass those cost efficiencies on to our customers. Faraz says the UK is Coinbase's largest and most active debit card market based on usage patterns of the earlier card, followed by Italy, Spain, and France, with almost half the current card owners being active users, making purchases ranging from many thousands of euros for large ticket items to a few pounds for a coffee, he says, adding we're seeing quite an even spread. Historically, revenue for cryptocurrency exchanges like Coinbase has been directly tied to the price of cryptocurrency, with fees charged in fiat currency and increasing when the price is high and decreasing when it drops. For example, Coinbase itself saw revenue decline at an estimated 40% last year, from a reported $1.3 billion USD in 2018, when revenue included Bitcoin's monumental price increase the previous year to what Forbes believes will be $800 million USD this year. Faraz acknowledged that the fees charged to companies outside the cryptocurrency space could eventually become a new source of revenue, less dependent on cryptocurrency price fluctuations, adding, however, that isn't currently part of the plan. Our primary focus is to build our own services, he says. To give an idea of how much is on the table here, the credit card issuing industry last year generated 107 billion USD revenue and 24 billion USD for profit charging these fees and others to companies like Coinbase, according to a report by research firm IBIS World, in addition to PaySafe's past work with Coinbase. The Metropolitan Commercial Bank currently issues a Visa card for Bitcoin firms BitPay and Crypto.com, while European e-money firm Depocket Limited issues cryptocurrency lender Nexo's MasterCard. Our work with fintechs such as Coinbase includes helping them scale, partnering with them on issuance, and giving them access to APIs so they can build new products on our network, said Terry Angelos, Visa's global head of fintech, in a statement to Forbes. For example, in addition to being able to issue credit cards, Coinbase's status as a principal member of Visa gives it access to Visa Direct, a payouts mechanism that already gives users of Square, Venmo, and Zelle the option to receive payment instantly for a fee. Similar to a traditional wire transfer, instead of waiting 3 business days using the traditional ACH payment rails, being a principal member of Visa actually extends beyond just the issuing cards, says Faraz. Another cool thing I wanted to discuss is we have here the Chainalysis, pardon me, the Chainalysis to monitor AML compliance for crypto exchange Coinfield. I wanted to get into this article a little bit because to me it shows a lot of the technological progressions, as in the for example, amid a tightening regulatory scene in crypto, blockchain analytics firm Chainalysis has joined up with the digital asset exchange Coinfield. Coinfield plans to use Chainalysis technology to help with its AML, or its anti-money laundering. The practices Chainalysis announced on February 20th. Crypto seems to be leaving the Wild West behind. For investors and long-term investors, that is exciting. So to me, this Chainalysis with Coinfield, man, I'm all ears. Let's bring on the technology and move away from this Wild West. back into the article, media outlets have drawn correlations between the relatively new crypto industry and the Wild West, a niche industry running rogue far from the regulatory spotlight. Over the past 2 years, however, governing bodies across the globe have cracked down on the industry, shutting down platforms, finding ICOs, and adding requirements. The European Union, or EU, in particular, has tightened its leash on AML practices, introducing new regulations known as 5AMLD. In January, crypto derivatives exchange Debit announced its departure from Panama, leaving the EU-regulated Netherlands and escaping 5AMLD. Keeping up with the trend of regulatory expectations and policing, Coinfield said it will harness Chainalysis Know Your Transaction, or KYT, technology to keep an eye out for money laundering and other illegalities. The Chainalysis tech Coinfield will use pertains to movements around numerous crypto assets, including Bitcoin, Litecoin, Ethereum, and others. Coinfield and Chainalysis both shoot for transparency, and that is something the regulators are going to love. Chainalysis and Coinfield aim to please regulators worldwide. We both believe compliance is critical to the mainstream adoption of cryptocurrency, and we look forward to partnering with Coinfield to promote the safe use of cryptocurrencies globally. Chainalysis Chief Revenue Officer Jason Bonds said in the announcement. In addition to employing Chainalysis KYT solution, Coinfield said it plans to work with the blockchain analytics company's Chainalysis Reactor as a way to dive deeper into perspicuous situations. Chainalysis is a significant player in the crypto and blockchain space, and the organization has provided significant data into a number of crypto-related thefts in recent years. Cointelegraph reached out to Chainalysis for additional details, but received no response as of press time, and this article will be updated accordingly should a response come in. We're going to get into our final article for this video with the headline of Open Banking, where it's at, and why it's gone global. This article was from a few days ago, but I just didn't quite get to finish with all of my information. So we put it in this article today, as I still feel it's very relevant. Let's try that again. It's very relevant to the discussion at hand. A month or so prior to the recent delay of open banking in Australia, one of the industry's key global standard-setting bodies quietly aired its views about the seemingly ubiquitous rollout of what could apparently change banking as we know it. And well, they mostly concur. Open banking has the potential to transform banking services and bank business models. The Basel Committee on Banking Supervision concluded in a largely unreported paper on open banking and application programming interfaces, or APIs, in November. That's no small comment for the Switzerland-based body about something that is not widely known about in Australia, but it is consuming a lot of industry investment and attention, as seen in several of the more than 100 submissions to the Senate's inquiry into financial technology and regulatory technology. Open banking essentially involves making it easier for consumers to share their financial data with third parties to provide more competition around relative deals and products. In Australia, it centers around the newly legislated consumer data right, which was set up to ramp up in banking this month, but was delayed by the competition regulator just before Christmas until July, due to concerns around testing and ensuring the security and privacy protections would be in place. The new timeline means customers of the major banks can request their credit and debit card, deposit account, and transaction account data be shared with accredited service providers from July 1, with mortgage and personal loan data from November 1. In the eyes of the Basel Committee, which counts Australia as a member of jurisdiction, open banking offers several benefits, including more consumer-centric financial services products and services, and other efficiencies. But unsurprisingly, it also calls out key risks. Namely, the more data sharing potentially means more data misuse, and that growing connectivity in the financial system could raise issues if third parties aren't regulated and supervised the same as banks. Data sharing brings many benefits, but it also results in a bigger surface area for cyber attacks, states the report, which analyzed 17 of the Basel Committee's member jurisdictions, including Australia. And a lot of people are still unaware that today's digital gold is also considered data, as it is basically priceless in determining outcomes for many prospects. Data collected by third parties, whether via screen scraping, reverse engineering, or tokenized authentication methods through APIs, can be stolen or compromised. Furthermore, as data is shared, and with more parties, the possibility of a data breach increases, and therefore effective data management has become more crucial. The commentary around screen scraping is timely amid heightened debate in Australia about the practice, whereby customers provide third parties such as fintech companies their internet banking authentication details, for example, username and password, to access their data. While the Basel Committee acknowledged the challenges for banks relating to screen scraping, including that customer credentials could be stolen or misused, it also notes issues relating to banks often preferred more secure methods for sharing data, such as tokenized authentication through APIs, a form of software that provides for connection and communication. Some challenges associated with the universal use of APIs remain, and the time and cost to build and maintain APIs, particularly when done on a bilateral basis with multiple organizations. The lack of commonly accepted API standards in some jurisdictions, and the economic cost for smaller banks to develop and adopt APIs, it states. In Australia, the open banking landscape remains dynamic, even if not yet being widely known about or understood. A pure profile survey of 1,000 people last year found just 11% even knew about it. And the open banking, we're going into the digital banking, we're going into digital asset, credit, and debit cards. I mean, we have banks setting up new digital banks globally. It is just getting more exciting. And again, in these articles, we continue to state, as we do our research, we find not to focus so much on them, but I continue to highlight them as I'm just still amazed. As again, for the past 18 to 24 months, I had thought the Stellar Project had ended, it was over, it was dead, only to find it is absolutely massive and just totally hidden behind the scenes. And even again tonight, as we found in an absolutely recent article from just hours ago, I believe it was 10 hours ago, according to the article stamp, date and timeline stamp, for Visa, which is also going to use XRP and Stellar. It is very interesting and very exciting to me. But again, that is one of the 5 major cryptos that we discuss in here for the new people, obviously focusing on XRP. I saw this as I try my best to now end with a motivational and inspirational thought, as that's basically how I live my daily life. And now have a potential chance to share that with many people and kind of give them a little uplifting thought to end our videos. I was thinking, after a discussion earlier today, I was talking with someone and they seemed to be a little bit on the downside for personal things. There were challenges they seemed to be overcoming, but they seemed to be overcoming. And after listening and, kind of giving a conversation feedback as you would as a normal friend, and the conversation ended, they thanked, for just listening. Sometimes it only takes that shoulder, that ear to hear, and someone can solve their own problems. But many of us are stronger than we give ourselves credit for, and many of you are stronger than you realize. So I wanted to end this article in case for some reason you needed to hear that is basically don't quit, don't give up. And every time you get near that point, think this thought in your head: yes, you can. End of story. All right, guys, this is not financial advice. It is for entertainment purposes only. Please hit the like and subscribe. I forget this nearly every single time. I have direct messages and comments saying, reminding me to say that. But please, again, share, like, and subscribe. Hit the notification bell so that you can stay on top of our recent videos and continue to help us grow. Again, we are absolutely grateful and thankful for you. We love you, and have a good night until the next one.